There's a lot more that goes into pricing, say, a Procter and Gamble stock than there is that goes into Bitcoin. And, speaking more about variability, a lot of this comes down to standard deviation. I've talked about standard deviation in past episodes. Basically, what it is how much the price of one thing goes up and down around the mean. And the dollar, since 1972, has a standard deviation of less than 5%, about 4.62%. It's very stable. Stocks, they have a variability, if we're looking at the S&P 500, standard deviation of about 17, 18%. So a little bit more volatility. But what this means is that there's greater return than, say, putting all of your money into currency. Bitcoin, on the other hand, has massive variability. It has a huge standard deviation. Bitcoin supporters often will just look at snapshots of time to talk about Bitcoin's variability. But in the early years, Bitcoin had a standard deviation of over 200%. Again, stocks only 17% over history, but Bitcoin 200% in its early years. I mean, just looking at 2023 in a one-year time frame, it had a standard deviation of 40. Over a span of 4 years, from 20 to 2024, it was 73%. That's an incredible amount of volatility.